Good morning, everybody. You can find your seats. It's a pleasure to welcome you all here. It's the middle of an Arctic morning here in New York. My name is Will Ingers. I'm the president of the board here at the Brazilian American Chamber of Commerce. And on behalf of the whole board, I want to welcome all of you here for this very important discussion on Brazil economic and political outlook. Obviously, it's going to be a very exciting year in Brazil with elections coming up. Brazil is getting some headlines also here from the United States, so I'm interested to see the view from the panel. But first of all, I want to thank Henry and his team here for welcoming us here to this beautiful place. King Spalding, you guys moved here last year? Couple months. Beautiful space. We're gonna be back if we're welcome. So thank you so much. Henry, a long-term board member here. So thanks so much. Also thanks to Safra National Bank for being one of our sponsors here. I want to pass the word to Henry to welcome you as well. Thank you.
Thanks, Will. We're lucky to have you as president and like Frank Sinatra, chairman of the board. Welcome everybody to King Spalding. It's an honor to host this event for you all. We have a decades-long relationship with the chamber. I've been on the board for many years. They've kept me, even though I've effectively moved to Miami. But it's a great pleasure. So I wanted to, my partner Russell Sachs and myself want to extend an invitation to all of you to participate. And Russell's been a great help in organizing this and kind of carrying the torch after I relocated. So actually, I don't want to take up too much time. I do, in addition to everyone that really helped put this together from the chamber and from King Spalding, I want to thank Jillian from our firm who puts these events together. It seems like seamlessly and without a lot of effort, but I know how much effort she puts into it, and these are always great events, and we hope we can host you for many other events. And I'll now turn it over to Paolo and Horacio to start the panel, and again, welcome and thank you very much.
Good morning. Thank you, Henry, for your introduction and for hosting us today. In Brazil, the most important event in 2026 will be the October elections. Until then, markets will remain in a holding pattern. Discouraged when polls show Lula ahead, more upbeat when they do not. Beneath these swings in sentiment, however, the underlying picture remains one of persistent mediocrity. And the episode of Banco Master is another indication of widespread corruption in business, in the political class, and ruling elites. From a macroeconomic standpoint, the medium term is not favorable. We all recognize that a fiscal cliff awaits the next president. Even the administration's budget for 2026 admits as much, while still proposing a 9% spending increase. In the meantime, inflation this year is likely to be somewhat lower, as is growth. That mix should allow the central bank to start an easing cycle, as signaled in yesterday's COFOM meeting. With a softer dollar, carry trades should help support the currency, reinforcing the disinflationary trend. Against this backdrop, we have an outstanding panel to discuss what all this means for the near future and for investors. Many of you know our format. We will begin with short individual presentations. Then my co-host, Horacio Giacomelli, will lead a discussion with a strong focus on investment strategy. We will have time at the end for your questions. It is an honor and a personal pleasure to open our session with Alberto Ramos.
Okay, maybe I'm a little bit too far. Good morning, everybody. It's a great pleasure to be here. Many thanks for the kind invitation. It was a pleasure to see so many familiar faces. I'm going to tell you, I'm not a contrarian. When I bring a tie, nobody wears a tie. When I don't bring a tie, everybody's wearing a tie. So I cannot get it right. I hope next time I'll bring a tie. If nobody's wearing, I'll take it out. Brazil, the macro outlook. We just published the macroeconomic outlook for Latin America, which of course includes Brazil, at the beginning of January. And the title is telling. And the title is 2025. Is that you again? That means that there are some elements of continuity, of some similarity between the macro backdrop, both domestically and external, to what we experienced during the second half of 2025. Starting with external backdrop, we have resilient growth, about 2.8%. Our view is that we're going to see overperformance of the US economy, China and Europe. We also expect some mild depreciation of the dollar. Oil prices relatively contained, which is good to keep fuel inflation down, and it's good for the inflation outlook. We also expect to see more rate relief, so basically the Fed and other central banks cutting interest rates throughout the year. And for those that depend on copper and gold, that's really a bit of a commodities nirvana. In terms of trade, will remain very well supported. So in a certain sense, that is the scenario we had at the second half. Now, moving to Brazil, last year was a year of growth, slightly above 2%. We don't know yet the number for the fourth quarter, but it's going to be a number between 2.2 to 2.3. Inflation at 4.3, not 2%, not the target, but within the target band. Very resilient labor market, where the unemployment rate is below the neutral rate of the NAIRU. The fiscal remaining the key issue, the key macro fundamental that is the rates. That's something that is really like a soft macro fundamental, and I'm sure we'll discuss in more detail the fiscal picture. This is an election year, and in terms of the macro performance, we expect the economy to decelerate slightly, despite a very significant monetary restriction. Monetary policy is still quite restricted. The policy rate, the selling, is still tracking at 15%. Yesterday night, the Copom provided guidance that they intend to start the rate normalization cycle at the March meeting. So rates are coming down, but from 15 until neutral, there is still a very significant distance. And at the same time, the central bank also said that they were going to be cautious in the rate normalization cycle, and so that the market doesn't get too carried away in pricing aggressive rate cuts. What we expect is 250 basis points of cuts, from 15 to 1250, is still a very high nominal real interest rate. But because we don't see that major progress on the inflation front. Last year, inflation benefited significantly from currency appreciation and basically and food prices. Food prices came down, fuel inflation was low, a reflection of lower oil prices and a strong currency. And this year we expect some normalization of food inflation and a labor market that is still very tight and probably will continue to be tight throughout 2026. Will continue to exert significant upward pressure on services inflation. Services inflation is running above 5%. If you look at some specific metrics within services inflation, for instance, services that is more correlated with conditions in the labor market, the momentum is tracking at above 8%. So that shows you the connection of a tight labor market, the pressure on wages, the pressure on costs, and the services that are labor intensive, how much that is impacting inflation. So we don't see inflation below 4. I mean, it could be just 1-2 decimal points, but our forecast at this stage is that inflation will not be aligned with the targets. We have a more bearish view on inflation than the central bank projections, and more or less in line, slightly above what is the market consensus as expressed by the weekly survey of the central bank, the focus survey. In terms of fiscal policy, it's not a secret to anyone here that over the last 3 years we have seen a very aggressive implementation of a tax and spend strategy. And the tax and spend strategy, let me just offer 2 observations of it, is quite interesting from a macro standpoint. If you tax and you spend, you're not necessarily leading to a very significant deterioration of the fiscal baseline. You get more revenue, but you spend it. So in terms of the overall fiscal balances, with particularly the primary balance, you don't see a very significant deterioration. So that is somewhat neutral to the fiscal, but it's not neutral to demand. It's not neutral to the economy, because the fiscal multipliers are different. And let me be a little bit more technical here. The tax and spend strategy, basically you are taking resources, you are generating income from tax bases that have a somewhat lower propensity to spend or to consume. It could be the to corporates, it could be high net worth individuals, and we are transferring income to cohorts that have a higher propensity to consume. So if you take 10, but you give 10, but you give 10 from people that have a low propensity to consume, and you give 10 to people that have a higher propensity to consume, it's neutral to the fiscal, it's not neutral to the economy. That may explain why people are still fooled when they talk about the fiscal stance. The fiscal stance is a statistical measure that looks at the fiscal, the fiscal impulse. How much is fiscal policy contributing to demand? And you look at spending, and you look at revenue. You adjust for some cyclicality. You subtract the deficit this year from the deficit last year, and so the fiscal impulse is actually not that high. Well, but that's deceiving because the composition of the taxing and spending is stimulating the economy. And by stimulating the economy over the last 2 or 3 years, above what is the growth potential of the economy, and I will argue and submit to you that the growth potential of the economy is still relatively limited because we have 2 years of growth above 3% and the economy overheating and generating inflation, and the current account deficit more than double. So all those are telling signs that the economy is growing more than its potential, at 3%, which is nothing really special to write home about. It's not a dizzying speed of 2%, with a lot of spending, with a lot of increase in public debt. So you're basically turbocharging the economy with spending and increasing debt, which future generations will have to pay. So even though we have some neutrality out there, the overheating of the economy put pressure on inflation, that put pressure on the central bank to discharge its constitutional mandate to keep inflation low and stable at the target, to raise interest rates to 15%. So when you hear Minister Haddad and other members of the government criticizing monetary policy, that everything is fine and dandy, look at the primary balance, were it not for the interest bill, well, the interest bill on my credit card, I pay it. It's not my neighbor that pays it. And the interest bill of Brazil is also paid by the government. It's not that there are like 2 separate entities. And if you establish a connection between the fiscal largesse and the pressure on the central bank, that explains why you pay more than 8 percentage points of GDP in interest rates. They are connected, to the performance of the economy. So that is a byproduct of fiscal policy. That's why we have these interest rates. Not that the central bank is masochist and it likes to punish people and the economy, by having rates at 15%. There is a logic to it, and it's not a maddening logic. And we have interest rates at 15, not forever. We have interest rates to bring inflation under control. When inflation is under control, we're going to have 2 wonderful things, which is low inflation and lower rates. But to get low inflation, we need the cooperation of the fiscal authority. You're not getting that. And what we see is monetary policy pushes to the right. They push interest rates. They try to contain demand. And fiscal policy pushes to the left. No pun intended. We're trying to stimulate the economy. So can you imagine that we're trying to move in any direction? One pushes to the right, the other pushes to the left. You see very limited progress on inflation. So we'd like to see more progress on inflation coming from the fiscal. Good luck with that. It's not going to happen. And also, I do not happen fiscal policy to be to deteriorate significantly in 2026. It's an election year. Every single government likes to spend on an election year. Every single incumbent uses the budget in order to collect political dividends. It's happening. Some of that is directly through the budget. Some of that is quasi-fiscal stimulus, could be a credit measure, could be using the balance sheet of the state-owned enterprises, could be using the balance sheet of the state-owned banks in order to keep the economy strong. So what do we expect in terms of growth for this year? Close to 2%, maybe slightly lower. Monetary policy will be restricted. Fiscal policy won't. There is probably 0.7 to 0.8% of GDP in stimulus in the pipeline with an eye towards the election. Credit consignado privado, and the number, the recent measure to increase the minimum threshold to pay income tax, and the number of other federal programs that will keep the economy relatively resilient. Like growth at about 2%, it's not a high growth, but the economy is not going to fall off the rails. So just summarizing, inflation probably 4% plus, rates coming down by 250 basis points, growth in the 2% handle, probably slightly below that. The fiscal is bad, but probably is not going to get worse. The overall fiscal deficit probably continue above 8 percentage points of GDP. And the external balance sheet, the current account, the capital account, that remains Brazil's strongest macro fundamental. At 3% of GDP, I'm not particularly worried about the current account. The capital account is still generating significant FDI, and Brazil is sitting on a pile of reserves. From the external standpoint and the capacity to deal with external shocks, I'm not concerned. I'm concerned about the macro picture, I'm concerned about the fiscal, and I'm sure we'll also talk about elections later on. Thanks.
Thank you, Alberto. That was an excellent overview, and I think points the picture, the negativity of the picture very clearly. It's interesting to note that even though the fiscal accounts show a primary deficit that is within control, as Alberto mentioned, the debt to GDP just keeps expanding. And part of that story, as Alberto said, is the very high burden of the interest bill that has to be financed as well. So even though the primary accounts are somewhat under control, the overall fiscal pressure is tremendous, and debt to GDP is expected to go to around 80% or more this year. So that's a real problem. And to keep us with our focus on more of the fiscal and macro story, we're really delighted to have with us a good friend, John Welch. I hope you're online, John, and please.
I'm here.
Okay, if you could keep your comments to about 8 to 10 minutes, please. Thank you.
I will. Thank you, Paulo. Thank you, Drauzio. Thank you, Will. And thank you, the Brazilian American Chamber and King Spalding for hosting this. I can see both are about as optimistic as I am, which is great. Anyway, I'm going to turn Alberto on his head, however. The fiscal framework the Lula administration put in place in January of 2021 was 2023, excuse me, was exactly the opposite of what Alberto said. It's spend and then tax. It's like a dog chasing his tail. And it never was going to work. When you have a fiscal rule, it has to be transparent, simple, and strong. And the spending cap, the real spending cap, was. They threw that in the trash and came up with this thing, which is almost impossible to understand. And it was clear it was not going to do all that well. At the transition, you had the transition law that ramped up spending, money from state banks, stopped privatization, reversed many of the microeconomic policy initiatives. This was after the prior administration had to accommodate COVID a bit, like expanding expenditure. And they said it was temporary, and it was temporary. For the first time in my recollection, we had a temporary increase in expenditure in Brazil that turned out to actually be temporary and not permanent. So by the time we came around to July 2021, we were back to primary surpluses. That's primary surpluses is the net of interest balance of the federal government, or the overall public sector. That transition bill undid all of this, and we were back in deficits, and they returned in August 2022. The fiscal authorities don't have all that much leeway. Brazil has mostly non-discretionary earmarked expenditure, and they tried to get rid of that years ago, and it helped, and we had some pretty good fiscal outcomes, but it's sort of gone away the other way. So let me take a look at the condition. I know Lisa will talk about this as well. Great to see old friends, by the way. Brazil is in an area of strict insolvency. That is, if we think about, they can't grow out of this, because the relationship is if the nominal deficit is bigger than the debt to GDP ratio times nominal GDP growth, they're insolvent. And we're just sort of assuming things stay like this forever, which they can't. Because they have so much non-discretionary expenditure, it creates a big problem, because especially in the Social Security sector, anything that Brazil does in fiscal to improve it has to be done by reform. It can't be done by early fiscal fiat. So the main thing here, I would say, into the future, again, is Social Security. And it's hard to believe that, but yes, even after we've had these reforms. The reforms that we had starting in the Temer administration and then in the follow-through passed in the Bolsonaro administrations stopped the deterioration of the Social Security accounts. Brazil is still at its demographic peak. There's absolutely no reason to have any deficits. I mean, even other countries that have similar demographics, like Ecuador and so forth, have had primary surpluses throughout this. And the United States had them until just a couple months ago. So if you have a primary deficit, it's got a little better, and it's more stable than it was before. It's running, if we put in add our PPS to our GPS, it's about 3.5% of GDP. But that's not solvent. You can't have a solvent public sector if you have primary deficits. And that's the other concern I have. The administration talks about having, when they talk about deficit zero, they're talking about primary deficit. They're not even making a chunk of payments into their interest. They need a 2 or 3% of GDP surplus to really start weighing on on the debt to GDP data. The net debt, which we don't really follow anymore, is about 65% of GDP and climbing, but more slowly. And the gross debt reached 79% in November. And it's just been upward going. And I don't see, as Alberto and Paulo said, certainly not in an election year we're going to get this type of reform. But after this year, really the new administration is going to have to do something. How can we predict we're going to have a fiscal crisis? Well, that's really hard. It's sort of like bankruptcy. You know, you're going bankrupt slowly and then all of a sudden, right? And that's what happened with Dilma. It's the same combination of policies. It's hard to say when the markets will lose confidence, because that's going to be it. Everything else, what Alberto said, is absolutely right. The market is not losing confidence yet. You have fundamentals pushing dollar real down, and fiscal deficits, where you have a credible fiscal policy, do the same thing. But I suspect in some point or another, we're going to run into something. And certainly when you have only maybe 12% of your budget that's discretionary, we can't leave this to fiscal authorities. It's up to Congress to do some reforms. And it's up to an executive to bring those reforms back online. So I'll leave it at that. I gave you some numbers. The primary deficit has been there since the middle of the first year of this administration. And debt just keeps climbing. And I don't see it really that under control, actually. Just to make a point, many people, especially in the United States, I don't know if we have a problem like this too. It's not quite as bad, but our Social Security system is going to run out of its bond holdings in 2033. But if you look at the projections of the U.S. Treasury, they have primary deficits out into the future. I don't know how anyone, a professional economist, could publish something like this. Why? Because the value of your debt is the present discounted value of all future primary surpluses. If the market is pricing things, that's hard to do. You have to do expectations and things like that. So we're also in a little bit of a pickle in the United States. And really, you have to say, okay, both countries have to do a lot of reform, especially in Social Security. I'll end there, Paulo.
Thank you, John. That was very clear. I think that we're all aware that Brazil's fiscal mountain is really a great problem. There is this hiatus of an election year, the last year of the administration, but a great deal of expectation about what happens in the next presidential cycle. And at the same time, the country, of course, is immersed in a series of global crises. And it's really a delight, and we're very fortunate to have with us Lisa Shinoa, who has followed Brazil for many years, knows it very, very well, and will be able to give us a broader picture of Brazil on a comparative basis, but also on its own historical basis, and see where that takes us. So please, Lisa, thank you very much for being here.
Thanks so much, Paulo, the Chamber, our host, the fellow panelists. It's wonderful to see good friends. And I'm going to start a little bit more global. and then we'll get down to it, as Paolo asked me to put some things in perspective. And as he noted, I covered Brazil for many years. We have rotation policy. I stepped away from it. We'll be stepping back into it later this year. When I visited Brazil last year with my colleague, who's primary, Manuel Orozco, what I was struck by was, picking up on the points that have been raised, the fact that the discussion was around, well, we're going to meet the fiscal target of 0, what I don't even remember, right? 0.1 with a certain band. I'm like, the target's 0. And you have a huge deficit. Okay? Where is the discussion that I had seen years ago about a 2 to 3% primary? And I sort of felt like a broken record asking this over and over again, and that was nowhere to be seen. Right? So I think that's a key issue. I think the growth story, if we're looking at Brazil's rating construct, and I can go back to the reverse of what my planned remarks said, just taking off of Brazil, putting in that comparative context. In its rating, our ratings approach, right, we're looking at institutional setting, the economy, external position, fiscal, monetary. The fiscal is the weakest, but the growth story is also the weakest. And if we're looking at the growth story, we give a kind of a penalty, kind of not necessarily the right word, but we hit their growth assessment for below average growth relative to peers. That's notwithstanding some growth over the last couple of years, and this has been a back and forth. As you saw some higher growth on the margin, question, is this finally the fruit of some of the work of prior reforms under the end of the Temer and the Bolsonaro administration on the micro side? Or is it more of a spend and tax or tax and spend approach, right? But I think Alberto's comments that, the minute you started growing at, the 3-ish, you had the inflationary pressure. So I think that has weighed into our view of not taking away this qualitative assessment of below average growth. And you need a mix of you need this combination of fiscal reform of some manner, and I think it goes beyond Social Security and tackling long-standing budgetary rigidities, which also impinge, because I'm doing more work with local governments, and that totally impinges on local government accounts as well as the dynamism to growth. We need the two to come together, in my view, to kind of help lift ratings upward. The anchor is the external position, and some credibility in monetary policy. The institutional setting is sort of in the middle. But now putting it in a broader context, Brazil's rating is BB, stable. Despite volatility and uncertainty in the global climate, and that's what I want to make some comments on, if you look at our sovereign ratings over the past year, there were far more upgrades, twice as many as downgrades on a trailing 12-month basis. Ironically, right? And that's the point that I wanted to talk a little bit about, as well as the fact that you have an evenly balanced positive and negative outlooks. Okay? And people might think that's surprising, given all the noise we've had over the past year with policy initiatives on the trade and foreign policy front within the U.S. and what that has reverberations at times in the capital markets. And in LATAM, we've had more upgrades. If I look at them, and I can highlight Jamaica going up, I can highlight Costa Rica going up, and they're a BB, the same as Brazil, right? Argentina went up, but from like CCC minus to CCC plus. But you still, there's positive movement. Paraguay made it cross that barrier to investment grade. But Brazil's standing steady in the middle of this because of these very difficult factors. And if you go back in time, and Brazil's from the crisis in the beginning of the 2000s, and under the beginning of the Lula administration, the first Lula administration, the turnaround and the external vulnerability dramatically contributed on top of a fiscal policy initiatives and a better growth story to lift that rating. That external improvement is not something you can tap into anymore. It's there. It's what's holding the other weaknesses and keeping the rating as high as it is, along with some monetary policy credibility that's been built under the inflation targeting regime with ups and downs over the period. But as opposed to other countries and the sovereigns in the region, you haven't seen this upward movement. Stepping back more globally, again, we talk about resilient but signs of some stress, favorable yet fragile. And I think picking up exactly on Alberto's comment in terms of the global outlook, as we're looking into 2026, I think, went back to 2025, January, tariff initiatives, April 1, tariff initiatives, July, some initiatives with Brazil, on and off China, all of this, a lot of noise, but we sort of felt, right, a settling, perhaps, at least at S&P, our view, on the sovereign side, we haven't changed the US AA plus stable sovereign rating, with its key weaknesses of fiscal, just as John highlighted. And if we're, this noise, we kind of felt, okay, we're in a higher tariff environment period. That exact contour is going to evolve. We have the IEPA piece of that, etc. But I think we sort of felt things have settled a little bit, perhaps. But as I said at the beginning of last year, we need to be uncomfortable. We have to get comfortably uncomfortable. And I think running into 2026, the same thing. You've got Venezuela, you've got Greenland, you've got different tariff initiatives out there, on the table, off the table. I think we need, again, you can get being comfortable with being uncomfortable. Don't think there's going to be advancement of major initiatives in the U.S. this year because of the midterms. You don't have the option, well, you're not likely to see another reconciliation bill, et cetera, so it's going to be executive orders. But I want to highlight there are bounds around this, and that's also feeding into bounds around policy initiatives, ultimately. With some checks and balances, and that includes kind of the backtracking that we've seen, and part of that could be political, part of the affordability dynamic, which will limit how much you can do on the tariff front. So if anything, it might push it a little bit lower. Supreme Court, the Fed, we have a view at the moment that we have 2 more cuts coming with 25 basis points each, but it looks like our growth numbers that was embedded with our growth of 2% last year, this year, where now there's more upside to that, given the numbers that came in more 2.5 last year, could be 3 this year, etc. Question mark, I think we put on the table. The Fed may not be easing later this year, right? So all of these pieces out there are going to keep a lot of noise and volatility, but it doesn't necessarily mean it's going to translate in downward pressures on ratings. We didn't see that last year. Over time, some of these policy initiatives may weigh on things, may weigh on various dynamics. But if we're looking with U.S.-Brazil, both presidents seem to have somewhat of a constructive discussion for the moment. And the critical mineral aspect is a key initiative and policy priority of the U.S., and that's there as well. Which could over time provide some opportunity. Can we stop there?
Well, thank you, Lisa. Really, the world is a complicated place, and in part, I guess, because some investors want to diversify a bit from the U.S., given the predominance that it has had in the last few years, and it's clearly still the exceptional economy. And given all that is happening in Brazil and expected to happen this year, a difficult position for investors. So we are very happy to have with us Cadu. Cadu, are you online? Maybe he's not.
Who's there? I don't know why then.
You are, Cadu?
No, what is it? I'm not good.
Well, let's invert. I was going to leave the most anxiously awaited part to the end, but I see Felipe here on ready to go. So let's see if we can first get the view on the political scenarios, and we are really delighted to have with us Felipe Seligman from Jota, They do a tremendous amount of work on the political and legal landscape in Brasilia, so we will have a very well-informed view. Thank you again to be with us. Felipe.
Thank you so much, Paulo. Thank you, Will, for the invitation as well. It's always an honor to participate in this kind of panels that I learn more than I can share with you guys. Of course, it's sometimes difficult to talk about politics when we know that the outlook for the economy is not very positive. Usually is that the rule for the past few years. But that's a question that usually people ask me, like, if Lula is not in his highest moment, like his worst mandate if you compare between Lula 1 and Lula 2. He's kind of older, the politics in Brazil changed a lot, the environment is more uncertain. I would say that this is the more uncertain election that we're going to face. It's of course, we know that there are candidates and he is willing to participate and run again, but there's a lot of things that we don't know yet, and still everybody talks that Lula is the favorite. So how come in a situation like that, in a moment in the world that a lot of incumbents are losing election, we are again talking about Lula being the favorite to win the election in 2026. And I'm going to start and try to relate that with the economy, because I believe that there is a huge distance between the long-term problems that Brazil faces and the short-term challenges that we face. And I would say also that we are living a kind of a curse. And this is the curse that we have two political phenomena that is difficult to happen in the same time. It is Lula as a political animal, that there's no one that is as strong, as important for the Brazilian politics as Lula for the past 2 decades or 3 decades, if so. And also you have Bolsonaro, that is also another big phenomenon in the Brazilian politics. And why they are a phenomenon, I would say, right now, is because we don't face in elections that people are willing to choose of two great political projects that will present Brazil as the future of the nations. We are dealing with rejections, right? So whoever has a lower rejection wins the election. Why Flávio Bolsonaro? Why Bolsonaro, even if he's in jail, still marks high points in the electoral polls, and there's no alternative, there's not a third way that we can pick from that. And I truly believe that this is because nowadays Lula represents the image of those that reject Bolsonaro and these more right or extreme right ideas that are really strong in Brazil. And on the other hand, Bolsonaro represents the anti-Lula sentiment more than anyone else. So whoever Bolsonaro points as the candidate that he will support, himself, his family, Tarcísio, whoever, he will start and will capture this anti-Lula sentiment in a stronger way than anyone else. And I believe that this point was made clear yesterday when Kassab made did an interview with the Folha de São Paulo. Kassab is a political leader, a center leader that is trying to present an alternative in this election to show the Brazilian population that there's more options besides these polarizations that we are living in the past decade, I would say. And he says, I won't criticize Lula. And why he won't criticize Lula? Because he knows that he's disputing the votes of the right wing, of the right part of the spectrum, and he will dispute with Flávio Bolsonaro. And this creates a problem for the right wing. And that's why it makes Lula a favorite, because he, first of all, he's the incumbent, he has a lot of policy going on, the economy is somehow under control. It's not a disaster in the short term, as we already discussed here. The inflation is under control. We are in this expectation of the easing of the interest rates. There were few reforms that will make the difference in short terms as well of the livings of the Brazilian people that needs to choose between Lula and other alternatives. And Lula is the only alternative in the left part of this spectrum. There's no alternative. Lula wants to run. Lula is the most important political figure in this spectrum. There's no one else, and he can go by himself talking about his project, talking about his idea of what he sees about Brazil. Liking it or not, he's been clear about that. We're talking about tax justice. We're talking about taxing rich people to make exceptions for poor people. It's a very classic populistic project that we are used in Latin America, but also in Brazil, and that usually works in terms of election. That's why Lula is doing well. He presented a lot. I usually say that he has two avenues that he runs in this election. He has one avenue that is the deliveries that he's doing for the Brazilian poor and middle class population, and we're talking about the exemption, the tax exemptions for people that earn up to 5,000 reais per month. We're talking about distributing gas for free for more than 30 million Brazilians. And we're talking about exempting the lightning bill for more than 80 million people. We're talking about all these other measures in terms of credit, the consignados, and whenever you also exempt the tax for those people, they increase their power of getting those consignado and other policies that they are delivering for the population. So this is what we usually says that there are the deliveries that Lula were able to approve in the last year, and now we're going to see the impact of that in the economy, in the pockets of the Brazilian people. Then there's the narrative avenue that also Lula is preparing that. So the first one that, for the first time after decades, Lula recovered the flag of the patriotism that he lost and that the left lost, and Trump gave him this gift, and Eduardo Bolsonaro, as Lula pointed at, his main ally in that matter, gave him this gift that he now can talk about patriotism again, talk about the Brazilian pride and so on. So this is narrative. This is good for him in terms of facing and going to Trump and talking to him and not accepting the measures that Trump were trying to put against Brazil. Then there is another one. There's the 6-week work, the 6-day work week that they are trying to change this year, and they will try to push it. We don't believe our best case scenario is that they are not able to approve anything this year, but they will try to push the discussions to make people understand that they work too much, they should have one more day of rest during the week and so on. So this is also a narrative form of interacting with the population that they are trying to deal. On the other hand, in the right wing of the spectrum, you have a division. You have Flávio Bolsonaro, you have Tarcísio, you have now Eduardo Leite, the governor of Rio Grande do Sul, you have Zema, you have Ratinho Júnior, the governor of Paraná, you have Caiado, the governor of Goiás. They're all trying to get some kind of consensus, but they are not able. They are failing on getting a consensus about, first of all, a name that can face Lula in a competitive way, but second of all, a way of presenting an alternative project that can talk with the Brazilians in a better way than Lula does. And this is a challenging fact for them. Because now, a part of that, which is the Bolsonaro family, is not worried about presenting a Brazilian project that makes Brazil, that puts Brazil in a right trail, let's put it like that. They are presenting a project that is freeing Bolsonaro, that is giving amnesty to other people. So this is not appealing for the whole part of the majority part of the population. And then you have the Tarcísio, that will be the most, I would say, favorite guy to face Lula, that is having difficult time because he needs the support of Bolsonaro, and Bolsonaro didn't pick him by now. Of course, a lot of things can change, but I would say that Flávio Bolsonaro is getting traction. Tarcísio is not ready to compete. He doesn't have the support needed. And we have now a center that is putting themselves as an alternative. An alternative to win, I don't think so. I believe that is more an alternative to present Kassab's party, the PSD, as a party that can play the national game. Nowadays, the PSD is a regional party. It's a very strong party. It's one of the biggest, but they have a more regional role in the Brazilian politics. And he's trying to create a national agenda for him, and that's why he brought the governor of Goiás, Caiado, to his party, and he will launch a candidate to present them as the alternative. So,
Felipe, could you be, Felipe, I'm sorry to interrupt you, could you be summarizing, please?
Yeah, I'm finishing right now, and then we can deal with that. So, that's why Lula is the favorite, but also because his rejection is so high, and a lot of things usually happens in the year of the election, it's not possible right now to say that Lula will for sure win. He's the favorite, but we need to follow day by day, week by week, month by month to understand the final electoral outcome of this year. Thank you so much, Paul, and sorry about taking so long.
No, on the contrary, Felipe, that was absolutely masterful. And I, just to support your case, we forgot to mention, but unemployment in Brazil is at historical lows, and that obviously favors Lula. And also, government transfers are huge. 25% of the Brazilian population, of Brazilian families live from government transfer. And in the Northeast, this is as high as 35%. So clearly the government has a lot of sympathy given its programs. I think Cadu is with us again. Thank you very much. I mean, Cadu is in Brazil. We are interrupting his vacations. And now he has everything at his disposal, including the political backdrop, to give us a view on how he is seeing Brazil in this very turbulent year ahead. Please.
Hi, Paulo. Good morning, everybody. Thank you very much for having me. Paulo, I decided to come to BTG Pactual's office in São Paulo. I'm in the studio here, hoping that we have a nice, connection and space and all, and it didn't work, right? And now I'm connected to my iPad, and let's do it on the iPad. So, thank you again so much. We talked a lot about, all the challenges that Brazil is facing, and but one thing is very interesting. I mean, the Bovespa is rallying like crazy, right? I mean, the Bovespa is up 83% in the past 13 months in dollars. The premium to hold equities in its lowest level since mid-2020. These are highest levels since September 2021. So, investors are coming, and flows by foreign investors to Brazil, they have been quite strong. I mean, in January alone, January has been the strongest month for inflows by foreigners into Brazilian equities in the past, in more than 1 year. So, even with all the challenges, even with tough election ahead of us or an uncertain election ahead of us, investors are are coming to Brazil. I know a lot has to do, and maybe a lot has to do with investors rotating out of the U.S. and looking for alternatives in other markets, in emerging markets. So we are seeing flows to emerging markets in general very strong. And it's not only Brazil that is performing strongly in the region. I mean, our peers are also doing very well. So clearly, investors are looking for alternatives. And yeah, we have a big fiscal issue that needs to be addressed eventually, either by whoever wins elections, to be honest. But the economy is doing fine, right? I mean, we've been growing consistently for the past 5 years, and we're probably going to grow again this year. So if you add the growth that we've seen in the past 5 years plus what we are modeling for this year, Brazil will be growing accumulated 20% in 6 years, which is not amazing, but it's good, right? It's a 3% average growth per year, and employment rates are low. The current account deficit has gone up a lot because the economy is superheated, but it's being fully financed by foreign direct investments. So I don't think we are, the economy is not disorganized the way it was when Dilma was running the country. We are exhausting our resources though. I mean, we are going to grow this year again, but we cannot grow at the same speed that we grew in past years. The growth has to decelerate because we don't have more people to work, and capacity is getting to a limit. So that's why I think rates are so high. We have to bring growth back down below 2% to be sustainable. Another interesting fact when we look at companies in Brazil and how they're doing, we are going to earnings of listed companies in Brazil, removing Petrobras and Vale because they're they're too big and volatile. The earnings can move around a lot because of iron ore prices and oil prices. But removing these two, I mean, we are modeling for earnings to grow 17% in Brazil this year in nominal reais, but it's still good growth, right? And when we look at companies selling only domestically, I mean, removing the exporters, the commodity exporters, earnings are growing 12% this year. So, the truth is everything is okay. We need to address the fiscal situation, and there is a big question mark on who, if the next administration will be willing to tackle that challenge and to adjust the accounts. But the economy is doing fairly okay, and maybe compared to other countries, even the fiscal situation compared to the fiscal situation of other countries might not seem that dire. And so markets have been, and by the way, we're going to see rates start to come down now in March. I mean, the central bank's communique yesterday night was pretty clear about the cuts starting in March. We are a little more, BTG Pactual, we are a little more aggressive on the rate cuts we expect for this year than Alberto is. We are modeling for 300 bips cut, and for rates to end the year 12%. This should also help earnings the earnings in Brazil. The companies should do better because financial expenses are coming down. So again, I know there's a big challenge ahead, but we are in a much better shape now than we were maybe a few years ago, and let's hope for whoever takes over if President was reelected or if there is a new guy in office that he addresses the fiscal accounts the way it has to be, and then long-term rates might finally be able to fall, right? So and one thing that concerns me is that the provisional performance was too strong, right? So we are. At this point, we are only 5% from the historical average. So most of the excess premium we had is gone, and for the provisional to continue to move up, based on fundamentals, we need to see long-term rates coming down.
Thank you, Cadu. That was very good. I'm sure there will be questions, and Drauzio we'll have some. It's now my pleasure to introduce to you Drauzio Giacomelli, my co-host, and he will focus more of this discussion on the strategic aspects. Please, Drauzio.
Thank you, Paulo. Thanks for hosting us. Good morning. The question we've been getting the most over the past year, at least, is how to invest in elections. What's the elections trade? And my reaction has been the same and still is. There's one thing we know for sure. Nobody really knows who's going to win. It's very, very close to 50-50. Even if there is a favorite, it's very close to a coin toss. And this is unlikely to change until probably third quarter of this year. So we still probably have 6 months or so plus of this uncertainty. And we are getting paid almost 15% to wait in Brazil. And the rotation with the dollar weakness will likely continue. So my answer has been, don't bet on election, at least for now. So wait, get paid for it, ride a wave of the rotation and benefit from all these global trends. But eventually, and I think this third quarter plus, the dial will move, and we have to be prepared for that. So I'd like to focus this last round of questions on how to detect early signs that the pendulum is moving. And I think the move that concerns us is actually no move, it's more of the same. Everyone agrees here that it's unsustainable. So what we fear is that we stay on this unsustainable path. So I'd like to start with you, Alberto, and say, let's assume that it's more of the same, or close to that. How do you see this unfolding? Is the economy growth that will take a hit? Is the currency? Is the balance of payments? How do you think this unfolds, and what could be the reaction?
It's going to be all of the above. I think you presented a very interesting setup. Just a quick remark, 10 seconds on John Welch. I'm exactly on the same page. The tax and spend does not imply any order of causality. I agree. The spend and tax, but usually the acronym goes as tax and spend. But I think that the fiscal policy you are on a path to insolvency. We need a primary surplus of 2.5% of GDP. We have a deficit. We have low potential growth, and we have high structural growth rates. Do the math. We need a big adjustment. At least 3 percentage points of GDP. Yes, there are spending good GDPs. So they were in Argentina, where there is a way, where there is a will, there is a way. We made it a 5 percentage point of adjustment in Argentina after 2.5 years of a recession. So it can be done. On how to play and invest in, given the election outlook, it's highly binary and it's highly consequential. But I think the plot becomes more complex. Even if we knew for sure it's going to win the election, which we don't, it's not clear what that means. The variable that will reflect the most in the changing dynamics of the election, I think, will be the exchange rate. The exchange rate is, the financial variable that is the mostly forward-looking. Is a very liquid market, so if we sense or see something that good or bad, the exchange rate is the first variable to move. After that, local rates, because there are particular low rates, they have to be correlated with movements of the exchange rate. And then comes the economy and the labor market, and of course the equity market is a blend of both the macro fundamentals, growth and employment, and wages, and this factor rates, which depend on the different years. I think the variable that will tell you immediately how the market sees the evolving with economics will be the exchange rate. Until then, enjoy the ride. Rates are at 15%, exactly real rates at 10%. That's a reflection of very high carry. Brazil is not offering very high carry because the story is great, because if the story was great, we would not be offering 15%. And also in an environment of a weaker dollar, and with the Fed eventually cutting rates, interest rate differential is so attractive that pays for all the idiosyncrasies of the local story. But the point I want to make is, what happens if President Lula is re-elected? What does that mean? I'm not a political scientist, but I'm trying to analyze from a macro standpoint. There are some that say that in his fourth mandate, with no re-election in sight, in his 80s, President will pursue only socialist dreams. And therefore, if we implement the same policies of the spend and tax, that John mentions, the market is not going to take it. And this is like the shortcut to a major economic and financial crisis. If we pursue on the same policies on this term, things are not going to end that well. Knowing that, maybe that's not what's going to happen. Because if you have a financial crisis, it's going to take the legacy of President Lula. All the social enfranchisement and the performance of the labor market will disappear with the financial crisis. So it's a question of dogma versus pragmatism. The president believes in what he believes. He thinks that the main engine of growth has to be the public sector and public spending. He does not accept that potential growth, as Lisa mentioned, is actually quite limited. He thinks that he found the recipe to make the economy grow by 3%. Look, I know that recipe. We have $2 trillion to debt. We have 12 percentage points of GDP, and the living standards go up. If I use my credit card to go out to the most expensive restaurants in New York, and I change my car every 6 months, my living standards are going to go up, but the bill at some point needs to be paid. So growing on steroids, growing on debt is not a sustainable way to grow. So we don't know exactly, from a market standpoint, what a Lula re-election means. It will depend a lot on the signals during the campaign. I don't think we will see more fiscal measures that will relate to fiscal baseline, but you could see expensive fiscal promises. Things like free transportation, reduction of the work week, things that are promises on the campaign that prepare a fiscal cost out. So that kind of opens on that. If we know that Lula will be reelected, opens a path of uncertainty that will depend on who President Lula will nominate as the Minister of Finance, whether he sends any signals post-election that will embrace a little bit of fiscal consolidation. I don't like consolidation in this context. I feel fiscal containment, because I don't think there will be any fiscal consolidation. So the worst scenario is, we repeat what we did now and we end up in a macroeconomic crisis. The other scenario is a little bit more of pragmatism, keep the dogmas and the ideology away, but we don't make any progress on fiscal consolidation, so we're going to be wasting another 4 years to do the job that we need to do on the fiscal side. And to conclude, what if President Lula is not re-elected and if it is Flavio Bolsonaro, Flavio? What assurance and guarantees do we get that actually we get a fiscal adjustment? We know that it's not just exactly that likes to spend, the legislative that likes to spend. The fight is for the paternity of spending, who gets the political benefit of spending. So it's not a given that you're going to have a new lay moment where you do a very significant fiscal adjustment, which will be handsomely rewarded by the market, given the institutional constraints, given the political dynamics across all the three branches of property. But I think the market will interpret it perhaps more investment-friendly policies, a better regulatory framework, and even if you don't get a significant fiscal adjustment, at least we will acknowledge the problem, which is not the case now, and slowly we try to tackle the problem by at least containing spending a different deal. So you can see in both scenarios, we over two values of uncertainty that will depend a lot on what the main political actors will say after the election.
Thank you. Roberto, John, with you, assuming Lula wins, how do you see the fiscal situation unfolding, since we've been focused on the fiscal problem?
Well, there's 2 points that I'd like to make, and Lisa brought one of them up about the external sector, but I want to look at the level of foreign exchange reserves. 3 years ago, the level of foreign exchange reserves was bigger than all Brazil's foreign debt, private and public. Now it's about 50% bigger than the government debt. Not bigger anymore. It's gone the other way in terms of the total of it. But still, when the dollar goes up, Brazil gets a capital gain, or at least the government gets a capital gain, because they have assets in dollars and liabilities in reais. And I think that explains some of the things that have gone on with the exchange rate over the last 8 years or so. And that is, usually the real exchange rate follows the terms of trade. And that completely delinked in the last couple of years. And so it's sort of like Venezuela used to be. Right? Venezuela's a great bet, because all they had to do was devalue to have a gigantic fiscal improvement, and they're not anymore. And Brazil has that. So that's one of the, she was absolutely right. That's not only holding in things on the external side, but it's holding things on the fiscal side. And it also means that if the dollar goes up, the government's better off in terms of its debt to GDP. signals of maybe we're going into something not so great. We're sort of, like I said, we're going slowly. One way to look is the maturity of internal debt. Right now, 74% of internal debt is either linked to the IPCA or IGP, linked to the Selic rate, or done in repos and open market. That's a significant increase. So what that's telling you is people in the market are shortening up their maturities on what they want to hold from the government. That might be just a typical reaction for the election, but it's been happening for some time. So that's another thing that might set it off. Certainly, if the dollar goes up, Alberto, I totally agree with you. It's going against its fundamentals because it will help the fiscal side all the way. And the other thing are rates. As you said, we're getting 15% rates. The other part that held in everything was the central bank. The central bank has kept inflation low. It's not low. It's still kind of in the band now towards target. But they've had to do it with extremely high real rates. And that's going to take its toll on growth. Now, if they ease, as you expect, then inflation is going to rise again. Especially, Alberta and Paulo talked about service inflation. That's the one I look at. That's really important. That's it. And the external side you can't really control, but certainly that's the main focus of monetary policy. So again, it's sort of just like the other crises we have, it's getting worse slowly, and then all of a sudden, and it's really hard to figure out what would be the significant trigger. I totally agree with you. Get the carry. I've done that, and I don't know how much about the investment. I'm not going to really talk about that, but that's probably the best thing to do. And if you start to see these signs get worse, then start shifting your portfolio.
Thank you, Don. I think those in the U.S. will support the reduction in maturity of the Treasury market that the Treasury Department sometimes pursue. Should look at the case of Brazil. They may change their minds. Lisa, in your case, let's assume that's more of the same. Does it require a quick action from your side, or do you think that the more of the same warrants the benefit of the doubt? Maybe the deficit will reduce by taxing and spending maybe a little bit less, or it means that we are going on a slippery slope here and we have to act soon.
Thanks so much, Drauzio. Well, first, I'll always give the disclaimer, it's a group decision discussion, putting that out there. I think the path, as I suggested, for a stronger rating, higher rating, is a stronger fiscal story that includes outcomes. That could come from a mix of the growth and policy initiatives. I think it's hard to see meaningfully stronger fiscal outcomes without some kind of structural policy initiatives. So more of the same that keeps, to the degree that you can just be muddling along, you're not really improving anything. We have the debt continuing to decline. We have high deficits. Maybe they're coming down marginally, but we don't have anything, thinking of a real swing to a persistent primary surplus, etc. We don't have growth structurally really improving. These are I think those are the key things we'd be looking for. What policy initiatives would be forthcoming? But I think we'd also want to look at outcomes, right? You can suggest something, but at this point, unless it's, say there's a sense of some marginal improvement, I don't know that that's enough to have a committee change of view in terms of slightly better fiscal, etc., from that out there. The point, however, you raise on the domestic debt market, right, I think is worth noting, right? You have seen a shortening of the worsening of the profile of that debt. Not on the external side, I would say, right? And that's where, to John and the comment in terms of, when we're looking at net general government debt, which is our approach, we don't consider international reserves. So throwing that out there, that's for the global, that's for the external assessment, external picture. We're just looking at, let's just say, the Cota Única and anything really liquid, right? That's what we consider assets. But if you're looking at this debt profile, it's gotten shorter. You've got, the share of fixed rate paper is down, share of Selic rate paper is up, sort of on a trend basis. So the question, if you're standing still, right, so how much we're talking of more in the same, what happens, do some dynamics weaken further this strength in this domestic market, which is key? Does that permeate into the external position in some way? Is there other types of contamination? I think that is where, because of the very strong external position, it's hard, I think that's where we feel sort of anchored where we are. But if there are persistent weaknesses, does that contaminate other elements of the story? I think that signals on the downside. I think that's what we're looking for. Moving up, it has to be something, I would say, that's going to be more concrete. I don't think there's any imminent, and even just an announcement doesn't mean you have to have a move, right? We might want, one of the points that I was going to highlight, what's the composition of Congress going to be for whoever wins the election? There you're going to need, because of this kind of panorama, as opposed to, say, Malay, because I think neither will come in with this kind of charge, and public policy backing that also weakened at some point, but then got regenerized, right? Put that out there. I don't know that either in a 20-plus election, and I fully agree with that as well, neither's going to walk in with a major mandate. And to the discussion I think Felipe put on the table, it's a rejection vote either way, right? So therefore it's really going to depend on who, is there what is the commitment from that individual sitting in Planalto, and who they're surrounded with to kind of then secure policy initiatives.
Thank you. Since it's a group decision, I think it's going to be a very heated debate in the group when you guys meet next. Adu, in your case, let's assume it's more of the same here as well in the U.S., but no significant change in fiscal policies, more tax and spend, maybe less spend, but still the same idea. Can equities take that abuse?
I don't think so. I think if nothing changes in the next administration, then I think the markets will eventually give back part of the performance that we saw. I think there's probably some hope that the election will that an opposition candidate will win elections, or that President Lula and the new administration will address the fiscal situation in some way. I don't think anyone expects the BG party to come up with a big overhaul of fiscal accounts, but maybe some improvements at the margin. It's hard to tell. What is interesting, I think, is that at this point in time, Lula is clearly the favorite to win elections, and he's so favorite that I don't think he has any reason to offer what his policies are going to be. Right? Remember that even in the last year's elections, he didn't do that. I don't think he has any incentive to maybe announce his vice president ahead of time, which could be a positive sign to the market. Let's say, Fernando Haddad is the chosen name that might suggest that, that the succession to Lula would be fiscally, at the margin, fiscally more responsible. But I don't think he has any incentive to do that at this point. And even in that situation, when he's a favorite, and the markets are doing okay, right? Everybody, most investors that I talk to, equity investors, I have to say, they seem comfortable with Lula and with a new Lula government. They are, maybe because in history Lula has done okay, right, and has made the adjustments that had to be done in previous administrations, that he will do that this time. But I agree. My view is that if nothing is done, if no adjustment is made, the markets will probably will probably say, and it's another thing too. Today, I think the world is taking fiscal deficits and more lightly, and I don't see, the world is more, it's okay with deficits, and we know that changes, right? And from time to time, people get more concerned or less concerned. And if the market gets more concerned with fiscal deficits, not only in Brazil but around the globe, we will be in a very fragile position if nothing's done. I think the risk is very high, and especially after what the market's performed, right? The markets have done so well that people will be hoping for some type of adjustments in the new administration. And again, I think today most people believe that Lula is a favorite to win.
Yeah, I think, thank you. The last point you make, the incentives, I think it's very important because 3 years ago, investors claimed that they were fooled by Lula, who promised to be pragmatic, and he was not. And now, there's no excuse, right? We've seen what he's done, and if they vote for him again, so he has a even strong incentive to do that. And that's why we wrap up, Felipe. How do we see this unfolding, and what are the telltale signs that maybe it's moving to the left or not? Because also this Conco Master in Rodriguez is getting closer to the government, so there are many things. So what you're looking at to be more confident that the pen is swinging?
So the first thing that we have some model to analyze the polls, and the polls indicate basically that Lula, in our case, has 80% of chance of winning. But because we aggregate everything, if you put like Tarcísio as his competitor, that drops to 60%. So it will be more near to the flip coin. But we don't believe in this moment that Tarcísio will be the candidate. We believe that Flávio will be the candidate representing the Bolsonaros. And when we run our models, analyzing rejections and Flávio performance and so on, the probability of Lula winning goes up to 90%. So that's why, not knowing who will be in fact the candidate gives us this uncertainty that I would say that nobody knows. But I believe that the comments that Alberto did, they are perfect, because more important than knowing if Lula will win or not win is basically trying to analyze what happened next. And in our opinion, in our case, it's not given that Lula will be it's not totally given that he will be more leftist and least pragmatic, and it's not given that any other president will be more market friendly, just because they will need to, first of all, deal with the Congress. They need to be pragmatic. The political forces, they are unbalanced in this moment. The Congress has a lot of power. We're going to have a more right-wing Congress in next election, that for sure. The big parties in Brazil, they are from Centrão, or the center-based, or more right represented. So Lula will face an opposition, will face the same hard time that he faced in this moment. So he can, even if he wants to push more leftist policies and less pragmatic policies, he will still need to face the Congress and will have a hard time to do that. We have the scenario in which, if there is a need for a big reform, there's always a possibility that the Congress bring to themselves this challenge and try to push the government to implement a reform. And if the government is weak, they will have more power to do that. Let's not forget that nowadays they control more or less 1/3 of the non-discretionary budget. So they need the budget to work, so they have the money to spend. They are also, we usually say that we face more like a right-wing Congress, but they are not right-wing that don't want to spend. They like to spend because they are addicted to the public finance that now is under control here in Brazil. And that will face some challenges to a president that is not Lula as well, because they will need to deal with this voracity of the political class that needs this public money to keep being powerful here in Brazil. So this is something that equalizes everything. The power of the Congress, doesn't matter if it's Lula, if it's Bolsonaro. Let's go back a few years ago, like Temer could push a lot of policies and very good policies for the economy because he was not elected, like he didn't have the public support. At the end of his Congress, his support rate were like under 5%. So it was easier for him to do that. He presented the pension reform. He almost approved the pension reform after a lot of other reforms that were important in Brazil. He only did not because of the political crisis that happened, that always can happen in Brazil. This is a main factor that Banco Master, the day that the Banco Master were liquidated here in Brazil, the political class were very concerned about the fact. A lot of people that we talked at the day at the Congress, they compared the feeling of the politicians in Brazil as the Joesley Day back in 2017. So that's the feeling in this moment that this can affect everybody. So everybody's really concerned about, because of course the corruption theme is always bad for Lula. Even if this master scheme doesn't personally affects him, anything that can go near Lula affects him. It's a bad thing for Lula. But it's also bad for the Central guys that are more implicated than him, and it's bad for the Supreme Court. So when it's bad for everybody, sometimes we realize that in Brazil there are this kind of agreement, and we actually have a lot of uncertainty about this case. In terms of the next policy, I believe, now trying to dialogue a little bit with Alberto, that Lula is he's not 100% pragmatic. He needs to deliver a legacy. He needs to build a successor. He's worried about that, but he's pragmatic. So he will do whatever it takes to have the economy under control in the always the short term. Lula never thought about the long term. That's a fact in Brazil. And I would say that the politics in Brazil, they are not concerned of the long term. They are always concerned on the short term. And this is also a curse in the Brazilian politics. But Lula is a pragmatic. Usually, when people are afraid about Lula going too much to the left, we, for the past years, we used to answer with that. Lula is not Dilma, he's more pragmatic. Haddad was not Manteiga, and Gallipolo was not Tombini. So at least we are not in that situation that we had 10 years ago, I would say. But I believe that Lula will be as pragmatic as possible, but of course not he will not basically cheat his supporters or cheat what he believes that are the main flags, which is dealing with the inequality in Brazil, dealing with putting more money in the hands of the Brazilian people. So this creates challenges for Lula. With the equalizer, there is the Congress that won't let him do anything that is very crazy. So I believe that there is a middle ground here that will keep us not probably in a very disastrous way, but also not in a very positive outcome as well. Okay. Unfortunately.
It is 10:30 on this more hopeful note. I'd like to thank you all for your great presentations and you all for coming. Thank you.